Hey, good morning everyone and welcome to ShortSalePowerHour.com. Fred Weaver here, my shaky partner behind the camera, Kevin Kaufman, shaky in more ways than one, is doing the production today. Joined by our buddy John Newman in the Baltimore, Maryland area, right? I don't know if you...
Washington, D.C., Baltimore.
Well, yeah, I mean, the East Coast, it's like it's like another country to me. But we were actually out in your area recently, and John hosted a class for us out there, which we were very appreciative of. But we're actually here in Austin, Texas, and yesterday you probably watched the video with our good friend Keller Williams as well, cowboy hat and all, and his tool of magic tricks. That was my favorite.
It's actually a bag.
A bag of magic tricks, excuse me. So, John, actually just yesterday, now these guys are watching, so it's been a few days, but we were in a short sale mastermind. Gary Keller at the front of the room, Brian Ellington, and we had some individuals from some institutions, Fannie Mae, Freddie Mac, Bank of America, and Wells Fargo. And Citi, I'm sorry, did I name? Oh, I said Freddie, it wasn't Freddie, just Fannie and Citi. So I'm interested because you're an agent that does a lot of short sales, and you're also a guy that, well, you just tell it like it is. Now, you probably do it a little bit more polished than Kevin and I do, but I'm just curious, what was your overall take from that meeting yesterday? What did you, and it's okay, I mean, let's give them some credit for the things that they said that we agreed with.
They did show up after all.
Let's also point out some of the stuff that went on.
They still don't understand what they don't understand.
Okay.
They don't get what they don't get, and I don't know if they really care about understanding what they don't understand. They don't understand that the solutions to their own problems can be solved by us, but they don't get it. They don't understand there's a huge disconnect between the servicers and the investors and the real estate community and the homeowners, and they're not taking the steps to be proactive and solve their own problems.
So one of the things that I saw yesterday was there was this conversation around homeowners take too long to initiate the process, and we don't want to let them just live in the house forever. Now, there's one side of the argument that says, you know what, you're right, there's some homeowners that abuse the system, et cetera, stay in the house. I get it, okay? Well, you could call it abuse, or you could call it just making a smart business financial decision for their family, however you want to look at it. But there's the other side of the fence, which is a lot of these homeowners reach out to the bank for help, for loan modification help. And if you don't mind, I mean, are you open to sharing a little bit of what you shared with Fannie Mae?
Oh, sure.
You got into that conversation with, it wasn't maybe necessarily Fannie, but you were sharing a personal experience that you had.
Here's what would be a great episode. Have someone from Fannie try and get a loan mod on their house. That would be a great reality show. I mean, they haven't been there to see what they're dealing with. I've personally gone through a loan mod, personally done a short sale, and as I said yesterday, it was easier to adopt a child than it was to modify a loan. So I can raise another individual and bring them into a world, and that was a much simpler process than getting a loan mod. And I won't mention the company that I'm working with, but they were there. I would have loved to have said something about it to them. So it's not the homeowners. The homeowners are reaching out for assistance, but they're getting the runaround from the servicing institution.
Well, here would be my take on it. For the homeowners that don't reach out, tough. What are you going to do about it? They don't want help, they don't want help. But even if it's only 10%, even if it's only 5%, the ones that are reaching out deserve to be treated differently than they get treated. I always say that Kevin and my favorite client is the homeowner who's gotten rejected for a loan modification or run around in circles and then decided to short sale. They're my favorite, not because I'm making fun of the fact that they didn't get a solution to their problem, but rather because they understand the headache that goes on in short sales. I mean, the reason that you're sitting here today doing short sales, a lot of it is because you went and did your own.
Yeah.
You were your own first client. I mean, Brian Gubernick, our most popular, most visited guest on this show, his very first short sale transaction was his own home.
The funny thing is that I have literally had to coach loss mitigation on how to do their own loan mod. I went through, and I've gone through it 3 times with loss mitigation. they're trying to put me into a HAMP modification. It's an investment property. I don't qualify for HAMP. Every time they say, well, let's just run you through the system anyway, and then at the end of 45 minutes out of my life, they come back and say, oh, you know what? You don't qualify for HAMP. After 3 times, they came back and said, you don't qualify for HAMP. Then they told me, I said, I'm going to be moving back into this property, so it will become my primary residence. The individual told me, then let's just put you into HAMP. I said, are you sure about that? Because it's not my primary residence. We have this recorded right now. I want to let you know. She said, that's fine, don't worry about it. We are going to put you into HAMP. I was approved for a trial modification. 2 weeks later, I got a phone call back from the individual saying, oh, by the way, your investor doesn't participate in HAMP. How do they not know this already?
So let's just call it what it is. At the end of the day, there's just mass confusion going on at the bank level. There is a huge disparity between what the executives think's happening and what's going on the bottom line.
Right.
2 and 3 years ago when we were doing short sales, and even at the time I actually was doing a few loan mods, I would say that the executives weren't even aware that there was this disconnect. Today, I would say they're aware there's a disconnect, but haven't the slightest freaking clue how to fix it or how to improve it, or maybe even any concern to actually go about fixing it. Now, they're a lot more open to talking to the agent population, which I'm thankful for. This video is not intended to be negative. It's just intended to be honest with you guys. If you out there in the real estate community are hoping that short sales are going to get easier in the next year, I mean, go, I've got some oceanfront property in Arizona for you. I don't know what else to say to you other than it's not going to get any easier. Now, certainly some institutions will fix some of their processes and some things will get better, but this short sale game is going to continue to be a challenge, and that's actually, to a degree, how I think the banks want it.
I think you're right. If you've ever had an insurance claim on a property or a house,
analogy.
They try, to me it seems like they try and push and push and push, so hopefully you give in and say, you know what, I don't have the time to deal with this anymore. I think that's what they want to do with short sales and loan mods. So,
and as much as they understand savings over foreclosure, they actually don't want to just start saying we do a ton of short sales because they'd still rather try to do loan modifications. But that's a whole other conversation. Even when somebody in the audience asks the bank what their pull-through rate or what their success was of closed loan mods 6 and 12 months later, oh, I don't have those numbers available. It's because the numbers suck. All you're trying to do, Mr. and Mrs. Bank, is collect a few more payments knowing that loan modifications don't solve the end problem. You just want a little bit more money on your asset or what used to be an asset.
that's because they make money off it.
I know they do.
The
servicers make more money off of just getting another couple payments. So anyway, I would summarize by this. Mr. Agent, Mrs. Agent out there, it's your responsibility to push through, not accept no for an answer, to actually penetrate into those VP level executives inside the bank. They, on multiple occasions yesterday, Citi, Wells, B of A said, just escalate. Fannie Mae themselves, just escalate, okay? That was a common theme, and whether you like it or not, it's gonna be around to stay. Escalation is the way to get short sales done, and we're telling you how to get it done.
And if you don't understand how to do that, watch Short Sale Power Hour.
That was a great plug. Thanks, John. All right, guys, we're going to wrap it up. We're kind of in a noisy little area here today, but we'll create some noise on our own. Maybe we'll do a little softer clap so we don't get tons of looks.
Loud.
We're going to do a loud one. Okay, on 3. 1, 2, 3.
Short Sale Power Hour! Short Sale Power Hour!
Crushing it in the Hilton, Austin, Texas.